Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. In today's video, we're talking about the value areas in each bar and a new feature that we have on the Orderflows Trader software that differentiates the value areas that we feel are more stronger because they're exhibiting signs of accumulation or distribution. All right, so before we jump in, if you enjoy my channel, be sure to hit the like button and subscribe to the channel so that whenever I do post a new video, it's getting to be summertime. I should have some free time to get some more videos out for you guys. You'll be notified of when I post them. All right, so on the Orderflows Trader software, you'll see that we have a function on there to highlight the value area of the bar. All right, so you just scroll down here, and I already have it turned on, but you see it's right here, value area. And I have it, you could draw it out until tested or just keep it tested. And the value area of each bar, if it's a down candle, it's going to be red. If it's an up candle, it's going to be green. So it's going to match the color of the bar. And you see here, right, we have this green candle here with this value area that's colored green. We have a red candle with the red value area. And all the value area it's where 70% of the volume of the bar traded. Okay, it's not some fancy algorithm. I mean, it's a basic concept that comes from market profile, then was popularized more in volume profile. And again, every bar that trades that has volume is going to have a value area. In E-minis, you do have a nice range. In some of the slower markets, you're going to get, a smaller, tighter value area sometimes just because of the way volume is distributed. Now, the way I like to trade value areas, right? Because what is a value area? Well, it's the area where the majority of the volume in a bar traded. And oftentimes what you're going to see is sort of value areas that are overlapping, right? That are covering several prices over several bars. Like you could see right here, we got this bar at 841 this morning. It's covered 1, 2, 3, 4 with the bar at 842. The bar at 842 covers 1, 2, 3 price levels in this bar at 843. Okay, then the next bar opens up outside above the value area, doesn't trade back into the value area at 843, stays above that, and then we have a nice rally. Okay, and what we call that is an abandoned value area. If you're if you're a market profile follower, you're familiar with the term naked point of control, virgin point of control, or even naked value area or virgin value area. I call them abandoned because the market is moving away from that established value. Okay, now where it gets interesting is when you look for the market to trade back to a previous value area, because in theory, right, if you have an area that was established as value and the market moves away from it and eventually comes back to that area, oftentimes you're going to look for it to see if it can hold as support or resistance. Okay, now the problem is, you see, sometimes we just blow right through these levels, right? These red levels, right? These are abandoned value areas. You have some bullish one here, we sort of come down. And while in general it does make nice support or resistance areas, what I've done is I've done a lot of analysis on the value area itself, and I realized that some value areas actually exhibit signs of accumulation or distribution. Accumulation is obviously people building up a position. Distribution is people getting a position off their book, so to speak, right? They're distributing their position out. And what I've done, so since I was able to identify those value areas that exhibit accumulation or distribution, what we do is we highlight them a different color as opposed to just the normal green or red. So on the settings, let's pull it up here. Okay, you just scroll down and there's another function in there. It's called value area absorption. So you just click that and you can draw it until tested. Now the colors for bullish value area absorption is dark blue, bearish value area absorption is deep pink. Now we're going to get into a little semantic argument here, and people will throw stones at me because they'll say it's not right. If it's bearish value area absorption, in theory, it's really bearish value area distribution. I'm just using the term absorption because more people are more familiar with that. But it is the opposite of absorption, right? When I talk about value area absorption and distribution, they have the same thing, but on opposite, 180 degrees, opposite ends of the spectrum. So you're going to look for the dark blue or the deep pink value areas, okay? They, in my opinion, are going to be more powerful than just the regular value areas that I'm looking at to be support or resistance. I'm going to look for the bullish or bearish value area absorption as acting more as support or resistance. Okay, so you can see in here, right, this one, if it is a bullish or bearish sign of value area absorption, like I said, it's going to color that value area and the zone that's generated from the value area if we don't trade back into it, right? Blue if it's bullish, or deep pink if it is bearish. You can see this one is holding, okay? See, this is just a normal value area, right? That's why it's still green, right? We came back down, we traded down through it. Here you have a bullish value area absorption. Market came, traded into it, rallied off that. Here's a normal bearish one, bearish value area. The market did trade back up to it and sell off, but then we had a bearish value area absorption / distribution. See, the market came right up to it and then traded off of it, okay? I wanted a way, because I noticed, in my research that, some value areas hold better than others. And what was the reason? I wanted to find out why, and I like to think I came up with a pretty good reason why. It's because there's distribution taking place, like in this value area, or accumulation taking place here, okay? Just going through, right? This is your bearish distribution. Right, you can see we traded right up to the bottom of it and came off a little bit. There's just your normal value area that's not traded into. Same with this one. Okay. Now, what I'm really focusing on is the value areas that are abandoned, right? Where they're not traded into in the next bar. That is your trigger in a sense. If the next bar doesn't trade back into it, that's going to be, in my opinion, a level to watch for when the market comes back to it. So I'm just finding see if there's any other levels here. These are just normal ones. Again, you can see this is just a normal one. Market traded down through it. This was a normal one. Market traded through it. This was a normal one. Market traded through it. Okay. Here was one. It kind of held. Market dipped down below. Sort of went sideways. A couple bearish ones. Right, we traded up, got one tick through it, and sort of held, and this is where we are right now. But this morning, there's a beautiful one that occurred right off of the open, cash open, that is. Let me just find it here. Okay, well, there's a couple, right? So this is the one where I started with, but you had a bearish one here, sorry, a bullish one. Market came down into it, rallied up. That one we talked about. But look at this one here. Right almost off of, right ahead of the cash here. Nice bullish accumulation in the value area. Traded right into it. Market opens up and just ran. Now, again, bars are going to have value areas. So you can see there's blue, right, indicating that these bars are exhibiting the signs of bullish accumulation taking place inside the value area, right? But to me, it's not important because we are trading back into it in the next bar. What I like to see is the market move away from that value, not pull back into it. All right. So, even though, here's just your red value area, it's just, your green, your red, your green, your red, your green, green. That's just your normal trading that's taking place. Like I said, every bar is going to have a value area. And most of the times, the value areas, the individual bars, aren't going to matter. The ones that matter the most are the ones where the market just starts moving away from that established value. Okay. Um, just as you have, where's the pink one here, right? This is, let me just pull this down a little bit. You can see there's potential value area distribution taking place here, but then we just still trade around those areas, just as this one, right? What you're looking for are those value areas that the market starts to move away from and potentially pulls back into, right? And if it's a blue value area, right, you have that blue zone, you're looking for it to hold. If it was a pink zone like this, as opposed to the red, you're going to look for it to hold. And, I could even, if I wanted to, I could turn off the zones for the normal value areas so I'm not confused, especially if you're just sort of getting started with them. I like to keep the value area absorption until tested. The regular value area just fixed to that one bar itself, right? I don't need to have it drawn out. Okay, so hit OK. Just give it a second to come up here. And 4, 3, 2, 1 should come up. There we go. So I could see, I could just focus on this. I could focus on this. I'm not being distracted, right? I could focus on this. Okay, what do? Well, I know the value area high of this bar is 59.54 and a quarter. I know the low is 51 and 3/4. What do you want to do? Well, maybe I'll put a buy in, somewhere in the middle of the bar, somewhere near the top, somewhere near the bottom. Can sort of average it out if I'm looking for the market to pull back. Generally speaking, you don't get necessarily deep pullbacks into the value areas. They tend to be concentrated a little bit more towards the top end. So, definitely keep it around the value area high, 54 and a quarter, this level. You can scale in with a tick here, maybe a tick here. And you can see comes down, hits all three levels there, right, before moving back up. If you want a low risk trade, you buy on one end of the value area with a stop on the other, with your take profit way up here, right? I mean, you're buying it at, even if you're just buying it at the value area high or one tick above, call it 59.54 and a half. Maybe you got to stop down here at, we'll call it 51. That's what, 3.5 points. You went from 4.5, all the way up into the 60s before you got a bearish signal here. And again, this one traded right up to the value area low. Didn't trade into it, but got one tick there. That's why I say, you might want to just sort of go on the value, one tick above the value area high or one tick below the value area low to give you a trade. Because, imagine if you can short it in here at 67 and a half or a quarter or even 67, it trades all the way down almost to 57. It got down to, 58 more or less for trading back up. Then it finally traded back in there. But again, you're not looking for it to trade in there, come off, trade back in there. You're looking for the first test. But that, my friends, is how to use the value area absorption on Orderflows Trader. It's the only software that has it because it's my own proprietary algorithm that we designed to specifically find absorption in the value areas. Okay. All right, everyone. So thanks for watching this. I'll see you guys on the next video.